Hello, good day. This is the daily analysis of the Bitcoin symbol for December 31st, 2025. As predicted, the price entered a bullish correction and ultimately reacted to the 4-hour level. By examining the 1-hour time frame, we can see that, just as predicted, the price has entered the so-called unicorn zone or the BPR zone. It entered this particular area but failed to close above it, only collecting the buy-side liquidity here. But what do you see? At the moment, the price is currently in a correction phase, which is expected. The price is still expected to move upward. And now enter the specific ATR zone. If higher highs are formed here and we want to use them for trading, we set the entry point at this area, and once the candle closes, we place the stop loss behind the zone. Or, behind the zone, we can enter the trade with a 1-to-2 risk-reward ratio based on the FWG candle, or set the swing low or the sell-side liquidity as the target. We set the target here. Also, if the price, moves upward and takes out the buy-side liquidity, collects it here, and then closes an ATR candle within the zone again, we can use this opportunity to enter a sell position. We place the stop loss behind the zone with a risk-reward ratio of 1-to-2, or targeting the sell-side liquidity located here. If the price moves upward with momentum and displacement and closes above the ATR candle, we can anticipate the bullish trend of the price. We can predict that it might potentially move upward, and if it closes above this order block candle, it can then enter a sustained bullish phase. This would allow it to collect the buy-side liquidity here, and we can set the 50% level of the FBG range and this unicorn zone as a target right here, but with caution. When we look at the RSI, we can see that the price previously entered the potential zone and the noted level, and then experienced a correction. Now it has entered the potential zone once again, and ultimately it is in a consolidation phase where we can observe a special pattern right here. If the price moves upward and enters the zone again, we can take advantage of this situation for a sell position. On the 4-hour time frame, we can clearly see that the price is currently moving within a defined range. It could potentially move upwards. It might also enter this 4-hour order block zone, which is an important area to watch, and react to it. If it reacts to this zone, it could enter a bearish phase, especially if there is a downward displacement. If it is accompanied or followed by this, it could move downward and collect the sell side liquidity here. And in this particular area, there is what is known as an IFVG, or an order block zone. With the order block being located right here in this region, we can look for a potential buy position in the market. In this area, the price had formed a sell-side liquidity pool. It moved downward, collected the available liquidity here, and then closed again in that same zone, which is a commonly used trading strategy in the market. It forms a swing failure pattern for us, and with the price pulling back to this area, we can once again carefully enter a buy position and use this specific area as the potential entry point for the trade. By analyzing the 30-minute time frame, we see that during the Asian session, the price was moving within a range, showing limited volatility. If during the London session, the price begins to move upward, it could be a manipulation move. This means that in the New York session, we should look for a distribution move, where sellers may become more active and the price could potentially reverse direction. The manipulation move, and ultimately what we are seeing here is a clear distribution move that is taking place to the downside overall. Wishing you success and profits.